Good evening, dear startup community, and very welcome to our first Podim DX Satellite Event. We will have a series of such events leading towards the big festival, so to say, on the 18th until 20th of May this year. And we have a fantastic panel today to start with to welcome you on this main stage. We'll be using this tool Hopin as well for the main conference. And I'm very, very happy to be able, so to say, to welcome our panelists today. Oliver Hohle from Speed Invest from Austria, one of the leading venture capital funds of Europe. Oliver, welcome.
Hi, welcome everybody.
Then we have Julien Costeri from Fil Rouge Capital. Hello to Ljubljana.
Hello guys. Hi, bonjour, bonsoir.
Bonjour, bonsoir. Then we have Iman Carey from Techstars London. Iman, welcome.
How's it going, folks? Good to see you. This is the closest I'm ever going to get to being on a Eurovision jury, I think.
Excellent. And we have Urban Lapagna from Poland Conference. Urban, welcome.
Hey, everyone.
Thank you, guys. I think it's awesome that the Podium conference is taking place in this digital way this year. Great solution. We have great tools for that, testing it today for the first time in this really, really awesome panel. And I'm very grateful to you guys that you took time to speak with us about this very important topic. What's the status quo, the outlook for startup industry? Should we bail them out? Should we not bail them out? What kind of importance do they have? And obviously, what is the status quo in your portfolio companies? And maybe you have some advice for the founders around the world, around the globe, from the, so to say, one of the really key players on the global scale. So let's start. Maybe Oliver with Speed Invest. You just came from one call. I guess that's your dynamic from early morning till early evening till late evening. Calls. So what are startups telling you? What is the status quo in your portfolio?
So first and foremost, deals are happening. I mean, the truth is less deals happen, but they do happen. And I guess they get more and more concentrated around companies that are in a strong position, that are actually still having momentum, still having traction. So these founders that are in this fortunate position can actually demand still very interesting valuations. We just announced yesterday a pretty big round with at Verity in Austria that raised 30 million from Sapphire. We actually had five big rounds, big Series A rounds just in the last few weeks. So it's happening. At the same time, I feel that everything is getting a bit more binary, a bit more brutal. So the healthy ones are getting more healthy, and the ones that have a cough already are getting sick, and that's the reality also in our portfolio. So I mean, we are a seed stage investor. We also have a lot of pre-seed companies. So quite a few of them, actually more than half of them, have a runway of less than a year, less than 12 months. So that's of course a big worry point, how many of them are going to be able to fundraise, especially when you have, so to say, the double effect of a short runway in combination with a brutal hit on revenues or on your traction, which of course is very sectorally specific. Some sectors are actually doing extremely fine, but quite a few are heavily impacted. And if you're a travel startup nowadays with less than 12 months runway, it's not fun.
Oliver, you mentioned 5 deals being closed in the past few weeks. Were those deals that were, so to say, almost finalized before Corona crisis? And do you have any deals which were canceled due to and in the midst of Corona crisis?
Yes, I mean, all of those deals were already, I mean, any of these deals, Series A deals, take a couple of months to develop. So they have been initiated before, but of course it would have been easy to walk away for the investors in these last few weeks, and it didn't. And in terms of new deals, it's also happening. It's also happening, of course, with new deals in the last few days or weeks. We see a lot more existing investors stepping up and actually extending the runway, putting together syndicates, maybe with a few others coming in. So that's definitely happening. But like fresh outside-led new rounds initiated now is surely an exception to the rule.
Julien, what's the situation in your portfolio?
We're a bit different than Speed Invest in the sense that our second fund is really, I mean, we started less than a year ago, so companies that raise from us are still in a pretty comfortable position. We have one issue with one tourism company which we funded a while back, which is in the the situation Oliver described, in the sense that they were still burning cash, but they also had a significant drop of revenue. So we are supporting them. We're a big fan of this company anyway, and we decided to fund them today. Actually, we had an investment committee this morning. So, and I can give you stats if people like stats. We have 25 deals ongoing at the moment. 7 we did this morning with 1.4 million invested. 10 we will do next week with about 1.5 to be invested. We'll do 4 more within 3 weeks. And 4 are on hold due to the fact that they are in sectors potentially or impacted by COVID. So we've told founders, sit back, relax for the time being. We are likely to come back, but there's no point for you to spend money on a product, on business development at the moment. So for us, it's quite okay.
Are these bridging rounds for your current portfolio companies that you're talking about, or are these new deals that you're closing?
Yeah. So to give you stats, more stats if you want, we've got about 50 companies between Fund 1 and Fund 2, and we are doing 1 bridge round. So
all of these are new investments?
Some of them are older, but we always push founders to come to cash flow positive, or at least have a very quick way to cash flow positive. And we had a couple of rough board meetings in the last 4 or 5 weeks, but I think I'm thinking about 1 or 2 which actually paid off, in the sense that companies were sitting on a big pile of cash, but still with a very high burn, and we convinced them to really push the burn down to 0 and wait. So then, of course, we didn't need to put a bridge round together.
Okay, maybe just to give a context to maybe some of the founders that don't know you guys, Field Rouge Capital, what kind of tickets do you usually take? How big is your volume of your fund?
So we are a 45 million fund, and we invest, let's say, in a typical manner, between 50,000 up to 1.5-2 million euros.
Okay, Oliver, maybe just to have this information about Speed Invest as well.
Sure. So we just closed our 190 million fund actually a few weeks before Corona, so that was pretty lucky. In total, 400 million. Seed stage focused, very similar actually in terms of ticket sizes between 50, 100K, so very, very early, up to 1.5 in total, and can then deploy quite a few millions more in the winners in the portfolio. But the entry stage is seed. And we do that pretty much across Europe, from the UK to Moscow.
Iman, Techstars are known as one of the leading accelerator worldwide, but you also invest. Can you just give us a short pitch on your scope of activities as Techstars London?
Yeah, so from a Techstars London perspective, we invest in 10 companies every year across a wide range of different sectors. So everything B2C, B2B, hardware, software, you name it. We've had everything from semi-autonomous drones to talking cats that write letters to children to teach them how to read and write. So it's a pretty broad church in terms of the portfolio. At an accelerator level, we invest between $20,000 and $120,000 into companies. They come in, they do a 3-month program with us, get connected to mentors, advisors, partners, and investors. And then we have follow-on funds where we can do tickets from about 150K up to a couple of million into rounds of companies, only companies now that have gone through Techstars programs previously.
And that's your own fund, or did you partner with some other and you co-invest in this kind of situation?
Our own fund, yeah, our own fund. So Techstars now globally invests in about 500 companies every year through the accelerator. So we have kind of 50 different accelerator programs across Europe, the US, Asia, and Australia. And so we, typically out of those 500 companies, we'll do some follow-on investing in some of them.
So what is the situation? Let's first have a look at the accelerator. Do you still have applicants? What kind of, let's say, activities are there? Did you stop them? Do they move on?
No, we've kept going. So Techstars started running virtual accelerators 4 years ago now. So we set up a program called Techstars Anywhere in the US, because for a lot of founders, they're maybe not able to get in a plane and move to New York or LA or London or Paris for 3 months. They have family or other issues where they can't leave. So we ran this Techstars Anywhere program and built up a very solid kind of operational playbook for how to run an accelerator program virtually, right, over well, Blue Jeans and Hangouts before Zoom came into being. And so when coronavirus hit, we have a smart mobility program working in Turin at the moment. And obviously, Northern Italy was one of the first regions to be really locked down and hit badly by coronavirus. So the Turin program went remote about halfway through. Our Barclays FinTech program here in London, we closed the office in early March, and that program went remote. And so right now, all of the programs that are going on, we've got about I think probably about 160 companies going through programs currently. They're all having virtual demo days, virtual programming, virtual mentor sessions, etc. So we were in a really good position to be able to continue on as normal, both from the programs that are running and also from my perspective, we're out looking for the next 10 companies for Techstars London. And instead of being fortunate enough to get in a plane and go to Ljubljana or go to Zagreb or go to Kiev or anywhere else, I'm doing all my meetings in my, hosting a lot more people in my kitchen than I ever expected to do, basically.
Do you have any problem cases, so to say, in your portfolio companies where you are invested? Like we said, tourism, travel, whatever?
Yeah, so I think, you know, we've similar to what Oliver said, we've had probably a bit of I suppose a split in terms of portfolio companies. So there are some, you know, particularly companies that are in the food space who are growing at a rate of pace that is almost kind of unbelievable. You know, anyone who's doing education, so Banjo Robinson, which is the talking cat who sends letters to children, you know, Banjo is now selling 5 to 6x more per day than they were pre coronavirus. We're co-investors with Speed Invest in a company called Pesky Fish, who are doing fresh fish direct from boats originally to chefs. They pivoted their business. They're now delivering direct to home. They had their second best day of revenue ever this week. So, you know, we've had some companies that have had that level of success and growth. And then we've had others where they've had to, you know, maybe zero in a little bit more on the product, focus a little bit more on their relationship development with some of the existing customers that they have, because sales cycles have elongated or budgets have maybe diminished a little bit, or the people that they're selling into are adjusting to having to work from home and maybe can't access the systems that they previously had. Or, you know, what's happening to a lot of startups is the person that you're selling to has changed, right? You're not selling to, if you're a B2B SaaS company, you're no longer selling to a product manager or a team lead. You're now selling to a CFO or a financial director. And so we've had some companies that have had to make pivots. We've had some companies that have, you know, looked at ways of refocusing. We've had some companies that have done bridge rounds. Thankfully, so far we haven't had any that have had kind of a total catastrophe. So touch wood, that continues to be the case.
I was talking to one investor in fast-moving consumer goods from Austria today. Heinrich Prokop is a rather local investor with his fund Clever Clover, and he said it's rather difficult to launch new products in the food and beverage area because they don't have the contacts on the retail side. Somebody who could taste it, who could grab it, who could. So you actually have contrary experience growing all these businesses very strongly.
Yeah, I think, you know, I think people are looking for convenience. I think people are looking for reliability. I think in many cases, these are companies that have happy customers, positive reviews, you know, relatively popular presences online. So you can kind of see that there are other, you know, you're not totally taking a punt on a new product. There are other people out there kind of testing, using and enjoying it. And I think there will be, you know, one of the things that will happen, particularly as this kind of lockdown extends, is that you will see a little bit of behavior change, right? Once, you know, there are the folks at Ocado, who are the kind of supermarket delivery and grocery delivery company here in the UK. Their kind of aha moment was once you got 5 deliveries at home, that was it. You wouldn't go back to shopping in the supermarket. Like you would have created the habit of getting deliveries at home. And, you know, we're starting to see retention rates that kind of line up with that with some consumer companies. So there is, you know, and there will be question marks over, you know, will that revenue be sustainable over time, kind of post-COVID? But I think right now we're seeing a fairly substantial period of growth and potentially one of behavior change.
Just a quick question on that. Are these companies who already were on the market before Corona and now profit from their brand awareness, or would you advise somebody also to start a new business in this field today?
I think it's really hard to start something brand new today. I mean, I don't think it's impossible, but if you kind of look at there are some advantages, right? The customer acquisition costs, CPAs, CPMs, like all of those numbers are down somewhere between 20 and 80%, or maybe even 90%, depending on the category that you're in. So if you have capital and you can afford to reach people that way, that's not bad at all, and not a bad opportunity. I think the usual ways that people kind of gain mindshare, whether it be through press, PR, marketing, etc., it's very difficult to get cut through at the moment, just because there's so much bad news. So I think it is challenging for someone that's coming with a totally new proposition to market. I think a lot of our companies, the portfolio companies I mentioned, like they already had some sort of trusted status in the market, and some sort of kind of credibility, I suppose, by the time this all started.
For anybody who joined us after we started, very welcome to our Podim DX Satellite Event. We're on the main stage of our talk today. This will be the main stage also in 1 month, 18th until 20th of May. The main conference will take place, and we'll be hosting a series of online events as an introduction to this. We have excellent investors today, excellent guys helping us to, let's say, understand the current situation in the startup community. But maybe Urban, may I ask you from the Podim's perspective, how did you pivot, so to say, the concept for this year's conference, and what can we expect in May?
So we acted pretty much as a startup in that sense, right, of pivoting. So after the crisis struck, so we have basically three options: whether to postpone the event to the autumn, or to cancel it, or change it, or keep the dates, right? And we got super strong feedback from the community, from the founders, from the investors, and we are not the one that quit. So we decided to stick to the dates and keep the value for the founders, for investors, and for corporates. And that's why we, now gained the team, and put on the table the options, and decided to go full speed ahead. So between 18 and 20, there will be much going on in the virtual world of Podim DX. So we'll have 3 full days of program, and when I say full days, that means from 10 in the morning to 10 in the evening. In the morning part, we'll host founders, investors, corporates from the European part, and in the evening part, the US friends and founders will join us. So there will be full program for 3 days on the main stage, and then parallel breakout sessions in the parallel world. And of course, one of the main values of the Podim always was this deal making. So meeting investors and corporates and doing deals. And the deal room, as our main matchmaking platform, will be open for full 3 days. So the technology is there. It's really smooth and enables you, both sides, so the investors and the founders, to have really good conversation and structural networking. So really, ensures that all the, what needed the deals to happen. So we are super happy that, all the positive feedback from all of you 3 guys. So and the impulse from the ecosystem that this is needed, and will provide the conditions that deals will happen also, and that will provide everything to be the catalyst and the hub as we were before, when everything was offline.
This will be a state-of-the-art, top-notch event, so you guys make sure you get the tickets for that. Oliver, you mentioned something very interesting, and I get a lot of questions on that aspect. Many startups have a short runway. You said, I think, more than 50% of them have a runway less than 12 months. And these kind of startups keep asking me, or so to say, are looking for advice. What is a good way to speak to an investor in such situation, or if the runway is even shorter in the current situation? Should one bluff? Should one be honest? Should one just say, listen, help me, let's get out of it together? So what do you advise to your founders?
So I guess the first big question is, who do you talk to? I think the very important first conversation you have to have is with your existing investors, if you have one, and I assume we're talking now about companies that already have at least some funding. So it's super important that there is some signal of confidence from the existing investors, and that's of course much easier for a fund than for angels, and that's a problem. I see a lot of startups that are 100% angel funded, so to say, that that are running out of options. But anyway, that's a very critical element. Second, if you talk to, it's even more important now to be very, very selective and very well informed and well researched who you actually reach out to in terms of your potential investor base. I mean, everybody is extremely under pressure. Efforts, resource span, attention span moves massively to your existing portfolio. So new deals will only be done in very few cases. So much less focus on new deals. So you have to be even smarter, even more selective, even better prepared for new conversations. And then, yes, you have to be open. I mean, there is no, I think the times of bluffing, of creating FOMO is gone since a few weeks now. So.
Julien mentioned that they have one startup and had a couple of rough board meetings, but so to say, not overly dramatic. Do you have any cases or more cases than that that are dramatic in the current situation? We're talking about tourism, we're talking about travel.
We're not talking about tourism travel. We're also, for example, talking about payment. I mean, we have a lot of exposure in fintech. And payment startups often have actually indirectly, again, a lot of exposure, for example, to airlines, a lot of exposure to again, to tourism, to travel. So there are, of course, ripple effects. There's also, I mean, at the end of the day, a lot of the B2B enterprise focused startups have very big difficulties closing deals nowadays without face-to-face meetings, with everything being pretty much frozen on the corporate side. So it is, I think, with a pretty mature portfolio like ours, it would be a lie to say that we don't have quite a few companies that are hit severely in terms of their revenues. Too early to say how many of them will actually be killed by this crisis. At the moment, we don't have any case yet where we know it's not going to work out. But I personally expect this to go on for quite a while. I mean, the recession will basically come only in the next few months. And I personally do expect that we will see quite a few companies that were already struggling before that will actually have to shut down.
What do you think would be a reasonable runway currently? What kind of volume should startups make sure to have on their accounts?
Well, that is obviously everything north of 18 months is good. And typically what we try to do is a combination of injecting new fresh capital, but also simply drastically changing the plans, right? I mean, all the plans we've discussed 2-3 months ago that we have signed off personally ourselves are now useless.
Okay.
Massively readjusted, which
Julien,
is...
yeah. Julien, is that similar in your portfolio?
Yeah, I mean, I'd say we always put pressure on funders, even in case of high growth. We always kind of tell them, hey, where are the brakes you're gonna push if shit hits the fan, that you come back to a break-even point quickly, and doesn't change much. I think 18 months is a pretty good advice, I would say, from Speed. I mean, we took 14 to 18, so it's very similar. We anticipate a funding crunch. I mean, that's inevitable. Guys like us, Speed, and other VCs will have intern problems to raise the next fund because their LPs, which are generally big institutions, are going to become a little bit more, I would say, fearless about alternative investment, which we are in. So there's going to be a bit of a funding crunch, no doubt. So keep 14 to 18 months runway, and I think you can look at the future in a nicer way, and of course cut your burn as much as you can until clear things are taking place.
Many people say, especially also to the stock exchange markets and so on and so forth, the low prices are the best investment opportunities. So invest now or invest when the prices go even lower. Is that the same in the startup community? Is this excellent time now to invest?
Listen, I mean, in theory, yes. in reality, we are not. We are a VC fund. We are not a distressed fund, so we don't do grave dancing. So the reality for us is with our existing portfolio. Yeah, maybe we of course look at our interest. We talk about down rounds, 20-30% maybe sometimes when we are being asked for help, but of course this caters for a much increased risk. On the other end, the effect, yes, maybe first time fundraisers will probably have to we'll have to swallow a bit smaller valuation, but just by the nature of the market, there's going to be less capital available. Angels are going to look at saving their own portfolios or their own house or their own households, and VCs will have more difficulty to raise, which means they're going to have less money. So you're going to have a supply and demand adjustment. So in that sense, there's going to be a bit of a crisis on the valuation, certainly. As
For
far
how
as
long?
that, if I knew. I mean, it obviously depends how long this lockdown lasts. I mean, I see the end of it in some part of the world, at least in our part of the world. As of last Monday, it got better, and next Tuesday it will get significantly better. I don't know, but I think as far as investing, as I said, we are not distressed investors. We don't. We have different mentality, different vision, and we don't look at it. I think it's a very good opportunity for our startups to invest. The cost of acquisitions are really low at the moment. If you're an online business, which is in need, you get the same number of new customers for half the price, maybe more in some cases. So if you're well funded, that's an opportunity for you. But we as VC, sorry, I've been a bit long, but I don't see it that way.
Iman, Julian mentioned 20 to 30% down rounds. That was quite a topic that was discussed in Austria. Julian Teike, the founder of WeFox, raised that question a couple of weeks ago on LinkedIn and asked VCs around the world not to squeeze the lemon too much and to so to say, not to use the opportunity or not to use the crisis all too much to enforce these down rounds. What's your point on that? And what's the situation in London? Do you see down rounds happening?
We haven't seen a lot of down rounds happening yet. I mean, I think there have been kind of, I suppose, two very specific things have happened where, a couple companies that were going out and pre-coronavirus saying they were going to raise $1 million at 5 or 6 million post money valuation are now coming back and saying they're raising $500,000 at 2 or maybe 2.5, right? So I think people are raising smaller amounts of money. They're kind of decreasing valuations a little bit, and without wanting to sound like a horrible kind of VC, that's not a bad thing. Like, I think there were a bunch of companies that went out and raised large amounts of money at extraordinarily high valuations that they then struggled to justify, and so kind of flat rounds and maybe minor premiums or some down rounds were always on the card. So I think people are kind of condensing the amount of money that they need to raise. I think we're telling people, you should be raising for at least 18 months. And I've seen quite a few decks come across my desk in the last couple of days where people are raising for 24, and they're being quite open about the fact that, they're maybe a little bit more bearish on the length of time that we will all be locked down, or, the extent to which we will have kind of rolling lockdowns over the coming months. So certainly at seed stage, smaller amounts being raised, slightly lower valuations. Historically, over the last kind of 3 or 4 years, we would have seen companies at seed stage, because of the tax incentive schemes in Ireland or in the UK, giving away between 12 and 20% of the company in their seed round of funding. Most of the deals that I'm seeing at the moment at kind of pre-seed and seed, it's closer to kind of 18 to 25%. So companies are giving away a little bit more equity. And then the other big thing that's happening is further along in the life cycle. So companies that are going out and looking at raising series. I can't remember who said it on Twitter the other day, where at Series A and Series B, a flat round is the new 3x, right? And I think I think that's been something that we've seen an awful lot of, where companies who've had fairly substantial revenue increases are no longer able to tie those revenue increases to a proportional increase in their valuation. They're seeing maybe a 30, 50, maybe a 2x, 30 or 50% increase in their valuation from their last round, or maybe a doubling in their valuation, but it's not quite as frothy as it was before. I mean, there's also this kind of split that's happened, right? There are still extremely hot deals that are raising, tons and tons and like stupid amounts of money at crazy valuations, and that will continue to be the case. But certainly it feels like people are raising slightly smaller amounts. There have been some valuation haircuts. Thankfully, we haven't seen, Fred Destin did a great post the other day about like some of the really horrible terms that we started seeing creep in the last kind of financial crisis and the one pre that. We haven't seen any full ratchet clauses. We haven't seen any kind of, marked increase in liquidation preferences or participating preferences or anything kind of onerous from a deal terms perspective. But that might be a function of time, right? We're still in relatively early days, same way we haven't seen LP defaults at VCs yet, or at least none that anyone will admit. So I think that's another area that we have to keep an eye on, because that was kind of a bit of a systemic failing in '99.
Oliver, I guess this question could be considered from two perspectives. One, and maybe this can be also a question to you, how do you as Speedinvest go about this topic? One, when you invest in your current company, where the current investors invest into startups, so bridge it, how do you go about down rounds in this situation? And then on the other side, you could be investor in a company and have external new investors coming in, demanding a down round. How do you feel in such cases as an investor who maybe paid for a much stronger evaluation than the new ones coming in?
Well, it's market reality, frankly. If the company has no other choice and we don't have any other options, then you take what you get. That's the only way you have to think about this. But in our case, for ourselves, I mean, there are many other ways to protect downside, to mitigate risk than the valuation itself. You can work with the waterfall of exit proceeds. You can work with liquidation preferences. You can work with convertibles. I think there are a lot of smart ways to find, so to say, to bridge the gap that does not send such a negative signal as a down round. And that's what we are trying to do, frankly, in most cases. Real down rounds are really triggered if there's no inside option in terms of us being able to finance, and nobody else steps up. So that's really the last resort, but it does happen. I personally think we're still in this kind of twilight zone between the old and the new, and I personally expect valuations to go down in a few months quite significantly more than what we're seeing today. Today, it's just a matter of psychology that people need to adjust to new realities. And if you have been out there fundraising at a certain valuation, you don't just accept like 40% cut of that number just within weeks. It will take time.
Urban, can you give us maybe some insights on the situation in the CE market, or at least Slovenia and maybe the region around it? Are startups struggling? What kind of atmosphere do you have?
I mean, we have now selected 250, around 250 startups from all the applications. And we see a really positive trend in terms of increase of quality. So the startups are maturer than were before. And are, of course, closer to market and more interested for investors. So in that perspective, I think the current portfolio that will be on Podim is really interested. But of course, this dialogue will now, the conference is the place of the dialogue. So and this is all the big idea. So the startups must meet investors, must meet corporates, and must meet potential partners and get the feedback. And the dialogue has to continue. And in which direction this dialogue will go and which will be the trend, this will the time will tell, as everyone else said. But we still the basic, material, if you call it that way, is, I think it's there, it's happening. So I'm positive by nature, so I expect that this crisis to use as opportunity philosophy will also be in place.
Julian, what do you see happening around Croatia and Slovenia, where you focus on?
I mean, in terms of what? In terms of overall quality of the startups?
Quality and investment opportunity. Is that good time to go to CE and look for investment opportunities, especially in this region?
Listen, there's gonna be a slowdown in new entrepreneurs. I mean, we are very early stage. Because funding is going to be less available, the young entrepreneurs might be less keen to leave a comfortable job, or at least one that gives you the comfort of a payroll at the end of the month. Maybe. I mean, hard to say that we see it. At the moment, we still have a pretty impressive deal flow to review and pretty impressive ongoing later stage deal that we are working on. I think if there's a funding crunch, I guess our investment period runs until 2023. So I mean, we might be in a good position to be one of the guys with checks to write. So I don't know. I'm not overly pessimistic, but maybe you can call me stupid.
Oliver said good startups seem to be profiting from these situations. So also the funded startups, and maybe let's call them the not as good ones, are getting worse. Is that a good dynamic in general? Is that something that is only, let's say, happening faster due to corona crisis that would happen anyway, or do we have some kind of existential threats which founders have nothing to do with?
No, I think it's I guess this in crisis time, what you see is an increase of the natural selection. It's unfortunate to say, but I mean, the weaker people are more affected by this virus, and it's the same in terms of businesses. In crisis time, if you're weak, you're more likely to disappear. If you're strong, you might benefit from it. Just for the point that I mentioned to you earlier, in the sense that if you're strong, it probably means you have more cash flow, which means you can increase the pace of your customer acquisition. So that's just a natural selection. I don't think it's necessarily a bad thing, as long as it doesn't last too long. I think you still need people that are willing to create, to innovate, even if they fail, because I think that the percentage of successful ones, whatever it is still gonna stay the same. So you might as well have it on a bigger sample.
Imon, there was a discussion in England about whether to bail out startups in this situation or not to bail them out, also with grants of the state and so on and so forth. What's the state of discussion currently, also connected to the previous question of this natural selection? Should we bail them out? Should we not?
I think it depends on the company, right? I think there's there has been for the last couple of years a little bit of a bubble developing around the startup world. We see a lot of people running companies who might be better placed being a product manager or a head of engineering or a growth person at a company that's growing and scaling faster. And so there will be some of these companies that don't make it through the next kind of 3, 6, 12, 18, 24 months, etc. I would hope that a lot of good people will get absorbed into better companies or into faster growing companies as a result. From a UK perspective, there was quite a bit of debate as the stimulus package was announced to kind of support the economy. A lot of different kind of ideas were put forward. What they've eventually netted out on is there's about a £1 billion package announced for startups, of which 250 million is a runway fund, as they're calling it. So convertible notes, match funding alongside existing angels and VCs. So companies who are doing bridge rounds or who are doing new rounds of funding will be able to apply for this. And if they're raising 500K from angels, they can potentially get up to another 500K from the government. There's an additional, and those checks, as I say, from I think about 150K up to 5 million. There's then an additional 750 million that's gone into the Innovate UK grant scheme, which are a series of government administered grants that support kind of research and development and various different areas that companies are interested in. And so again, straightforward application process. Grants are typically between kind of 25 and 150 K. Some of these will get a little bit bigger. Is it a good thing? I mean, I think that's an open question, because we're still trying to figure out exactly how it will be administered and who will make the decision on which companies actually get funded, you know, and what that decision-making process will look like. So there's still kind of a few question marks about it. I mean, I do think it is recognition of the impact that the startup ecosystem and the tech industry has had on the UK economy over the last decade or so. And I think it hopefully bodes well for some companies that are doing very well, but are maybe affected by sales cycles lengthening, or you know, various different challenges like that. Hopefully it will get deployed in the right way and end up in the pockets of the right people, but it's a government administered fund, so who knows?
Oliver, I believe that in Austria, we strongly believe that we should bail out startups for different and several reasons. So I will rephrase the question for you. Do you think it's the right way to go ahead in this, by also saying that the private capital should be the first step, and then the state can double it or secure it or guarantee it? So should investors also be the first one to say, we're on this together, and then the state comes in?
So I mean, first and foremost, I think it's ridiculous to if you look at the amount of money that the government is currently pouring into the economy, into all kinds of sectors, to then question whether the government should also target the tech sector, which at the end of the day will be instrumental for all of our economies in terms of job creation and transformation of the economy into the so to say digital age. To even discuss this, I personally find funny, or not funny, but ridiculous, to be honest. So absolutely yes. It's a small fraction of the money that is of taxpayers' money that is currently spent into the tech industry. If I compare like the whole, like just the amount of money that is going into individual bigger incumbent companies in Austria versus the money that is currently going into potentially helping out the tech industry, it's no comparison. So I think we should calm down on that point a little bit. In terms of matching private money, I think as Iman pointed out, the big question is how are the mechanisms that actually allocate this money, and as a default, relying on private judgment is a good mechanism. So in that sense, following the private capital is also a very logical approach. I personally would see this much better rather than a internal bureaucratic process that can go in any kind of direction, right?
Maybe let's have another round. We're getting closer to the end of our discussion. It's so interesting. So I could be really talking to you guys day and night, but maybe let's give some advice to the founders that would like to make themselves more attractive to you guys in this current situation or in general. What are you in general looking into when you invest, and maybe currently how can some startups draw your attention to them in the current situation? For all three of you, whoever wants to start, maybe Julian.
Oh God. It's I mean, it's not very original what I'm gonna say, but I guess, you know, I think we always look at the team first. So, you know, if you're a cool founding team that is prepared to not to bluff, to put cards on the table, and see us as a partner, a long-term partner, I think you have a good chance. I hate people that want to stand out just for the sake of standing out. We've had a couple and they're immediately on my end. They're on the blacklist. I like straight shooters, so if you want to catch my attention, talk to me about a big problem you solve and where you and your team are the best one to solve it. And I guess that's a good way to start.
You invest your money, or you also invest some kind of resources in your startups? Do you partner with them, so to say, not completely as operative management, but do you get involved?
So we actually in some of the case we formally have a board seat. It always depends on the size of our check, but I guess if we are the biggest check in the round, we probably want a board seat. In some of the other cases, we take a non-voting board seat, something like that, at least at the beginning, to understand better how it works. Interestingly enough, because we are, and it seems like founder kind of like to have us around. So a non-voting board seat generally become a voting board seat, just because it seems that we provide decent value to the people we invest in. So for the one who likes and who wants, we are pretty active, but we never force. I mean, if a founder, and we have a few in our portfolio, doesn't think we can bring value, we're certainly not the one that are going to push him to call us to ask about opinions, advices, and things like that.
Do you focus on the region, on the CEE region, or you go beyond that?
Yeah, so I mean, yes and no. I mean, our fund is creation based, which means we need to have some creation content, but that doesn't mean that we cannot relocate partially the team or fully or partially the team. So that's why yeah, the answer is yes and no.
Okay, Iman, what about Techstars? How can founders make themselves attractive for you?
I think there's a couple of things, right? I'm pretty easy to find on Twitter and LinkedIn and all of these other different places. So I think very easy to just reach out and get connected. We host lots and lots of webinars. We have one coming up next week where we do something similar to this, share a bit of information about Techstars London, how it works, what we do, and have some chances for people to ask questions. We have a pretty simple application process that people can go through. It's also very easy to get to us through portfolio companies. So, thinking about the region, great companies like Memgraph or Noir, who did Noir Foods, who did last year's program, Find Me Cure, Let's Enhance, Flawless out of Ukraine, who were acquired by Abstract a while ago. So you can get connected very easily through there. So I think reach out, have a chat, talk to portfolio companies and alumni companies to hear whether or not it's potentially a fit for you. I think more widely, the advice I would give to people at this stage as well is like communicate, right? Like I ran my first company started it in 2005 and sold it in 2009, and so ran it through the last crisis. And the biggest mistake that I made and the biggest lesson that I learned and the thing that I improved on was actually like telling people when we had problems and asking for help and being communicative with the rest of the team that we'd hired. And as I got better at that, we got better at finding solutions. And if you're starting a company, I would strongly recommend starting monthly updates where you look at progress, plans, problems, and asks, and start adding people that you meet to that update list. And keeping in touch with investors and mentors and advisors and other people, because the strength of your network is going to be something that will define your ability to survive over the next kind of 18, 24 months and beyond. And that's partially the investors that you bring on board, the board members that you have, and the people that you surround yourself with, but it's also kind of the wider kind of ecosystem that's around you. So I would say strongly advise communicate more.
Oliver, is that the advice you would give as well? You were founder as well, at the beginning, so to say, of your career, with some kind of threatening experiences as well that end up excellently at the end. But maybe from this phase of your entrepreneurial life, do you also have some advice for the founders today?
Survive. I think that's all that matters at the end of the day. And then ask yourself if you really want to do it. I mean, I think there are a lot of founders that kind of stumbled into this whole adventure because it sounded cool, and I think now is a very graceful time to stop it. Because it's going to be brutal and it's going to take a long time. and if you're not really in it with your full heart, I think now do something else.
There's this book from Hard Think About Hard Things, and somewhere in between it says there are no good or bad CEOs. There are only the ones who went through it and the ones who didn't go through it. So I guess this is the statement that you're making now.
Yeah, but I'm really meaning this in a positive way. I think there's a back then when I was going through the .com crisis. If somebody would have given me like really good personal advice, they should probably have told me stop it, because I probably could have stopped it, started fresh, and came out just as well as I did a few years later. So I think it's really an option that people should consider. If they don't, even better. But then you're full in, and then also investors will notice.
Are you not afraid to say that, given that some of your founders might be listening to you?
Oh, I totally. I think if you're a good investor, that's the conversation you have to have with your founders. We have a portfolio. They don't. It's their life. So, and it's not good for us either if they're burning out.
And at the same time, like Iman said, do you also think they should be, or Julian, they should be brutally honest to you? Do you appreciate that, or you get scared of this brutal honesty in this kind of situation?
I mean, I'm brutally honest myself, so I expect the same. So.
Oliver, from your founders as well?
Yeah, I mean, everything that I personally experienced. I mean, the one thing that founders hate is VC bullshit, and the one thing that founders really love is if they feel that somebody's genuinely interested in where they are personally and about the options they have. So I think that's just all fine. It's having a real, honest, adult conversation is always something, and that's something that's not that easy to be had. And then a lot of people don't even have the people to talk to around about this. I certainly didn't when I was in that situation. I didn't have anybody to weigh my options. So I think that's one of the things we should do.
This is an awesome discussion, Urban. Do we have any questions maybe from the main room? And if yes, you can please, so to say, send them forward to our panel. If not, I would ask you for some kind of closing words and outlook also for the podium. What's coming up next? Do we have another satellite event, maybe in the current weeks? And what can we expect from the event?
So I think, Eamon has set an excellent point. So, communicate more and strengthen your network. And this is one of the, values of the being on the event. So we'll have tons of mentors from Europe and from US that will talk to you and give you advice. And also, with them, you will be able to strengthen your network and also, maybe extend and broaden your options that you had at the moment. So it's not only about the fundraising, it's not about only getting the money, but it's also about surviving, as Oliver said, right? So talk with people, communicate, get different options, opinions, strengthen your network, and this is the biggest value of the event. And that's why it's so important, also in this time when everything is basically physically closing down, is to have 1,000 people in the same virtual room and be able to, in a systematical way, to talk with them. And yeah, basically now till the event in 18th of May, I think several satellite events will follow. Already one next week, and then in the week after. So each one will have a little bit different focus. One more on corporates, one more on digital transformation. So there's a lot to come. I encourage everyone to talk with us, to approach us, and definitely to see us virtually on the event as such.
Thank you guys for your time. I know you have to go back to your boardrooms, virtual boardrooms, and so to say, talks to your startups. All the best for this crisis. All the best, especially to all your founders. We have them in our minds, and we hope that they survive in this situation, and maybe, so to say, some of them also get stronger out of it. Thank you very, very much. Thank you, all of you, hop in our event and on our social media channels of Broadcasten and also Podim and in other partners in Slovenia. I hope this was interesting for you, really deep insights from key players, so to say, of European startup ecosystem. Thank you for all these insights. Stay tuned, and I hope to see you in May at Podim Festival. Thank you and ciao.